This is Eric Muathe from Muathe.com, July 24th, 2020, as we see gold pretty much touching the 1900 price level in what has been a fantastic run over the last couple of months. We can see here that there are lots and lots of gold stocks, of course, naturally moving higher. Now, it must be said this price acceleration as far as gold is concerned is not a complete shock. As we can see here, GLD picking up momentum as far as price action is concerned, and this is consistent with what we know and understand of the RSI. This being the weekly, we can see the weekly has jumped above 69.1 as of this week, and hence we are getting this nice gain for the week. If we take a look at the daily for GLD, it's not a shocker here that we've been seeing a nice climb in price again. Why? Because the RSI continues to hold above 69.1 also on the daily, and more importantly is what I've been stating here is as long as the RSI on the monthly for gold continues holding above 69.1, you have to expect that pullbacks are going to be there. They're going to be shallow. Ultimately, as long as the RSI is above 69.1, chances of the market, which is gold in this instant, moving higher is only a reflection of the strength of the RSI. Now, having said all that, let's take a look here at a stock that naturally is breaking out, and it is a gold stock, AEM. So we can see that yes, for sure there is a price breakout that has been taking place over the last, let's call it net. We've been trading above 2019's monthly closing high since this move here. Net, that is on a monthly basis. Of course, we've seen it drop below here, but managed to close above that level. So net, we can say, yes, that's a breakout. And this is the monthly. Now, if we take a look at the weekly, just another point of view, we can see that there is a breakout this week. So in terms of timing, that is a good entry. But my point is there seems to be some stocks in the sector, in the metal sector, the gold sector, silver sector, that do not meet the minimum requirement. So this is the monthly. We can see the MACDs are fine. At least we see the MACDs, one of the MACDs trading at 3-year high. So this is good. This is what you want to see. But the issue I have here is the RSI. As of right now, the RSI is not trading at 3-year highs, and I believe that eventually becomes an issue of lack of strength. So not all gold stocks are going to be on fire. In fact, if there's going to be any type of hesitation in the gold index itself, some of these stocks are going to reverse, and they're going to reverse substantially hard to the downside. The reason why I say this would make a lot of sense is take a look at the long-term picture for AEM. Again, you're going to find this in a lot of gold stocks. Just pull up the long-term picture and you're going to see there's a potential for a trap around here. And it is this understanding that the previous move in gold that was very successful in the early to mid 2000s. So this period here for the stock, which was reflecting gold's move. So from about, let's call it 03 to about 2012, 2011, gold was on fire. In fact, let's take a look at GLD itself, and you can see in that time frame how GLD looks great from about 2005 when the ETF started trading. This is a very desirable period as far as gold is concerned. So of course, gold stocks in that time frame were reflecting that look. So we can see a good move here. But I want to show you where there's some relevancy in terms of, oh, by the way, something else also. Not all gold stocks are the same. Let me explain. I wasn't going to talk about this, but why not? Take a look at this period from 2008 to 2011. So net, we can see this was a very choppy market. Of course, the general markets worldwide was seeing a major crash in 2008, but we can see this was a lot of choppiness, and you go to a new high but barely here above the previous high. Hope you can see that. So let me draw the box. This is the high in 2008, early 2008. So there is this period here, and we go on and record a fresh high marginally right here. But I want to take a look at this chart. Lots of choppiness here. Compare this with the swift move in GLD in the same time period. So the same 2008. You can see gold itself had a substantial increase in price relative to the drop in 2008. Compare to this stock here, which in that time period really had a small gain above the prior high. Small gain above the prior high. Not much happening from 2008. What am I trying to say here? Compare this with GLD 2008. A substantial increase in price. So relatively speaking, this stock underperformed when gold was on fire, which means it's not a good candidate. If you want to play gold, you'd rather play gold as compared to playing this particular stock, because it has shown a history of not having a strong push when gold is in play. Which brings me to my point. As gold is breaking out, this stock does not meet the minimum requirements of the ultimate Muathe breakout, and I think this is an issue. Gold itself might be strong, but some gold-related instruments might underperform. Which brings me now to this break in 2008 on the RSI. I'm going to extend it out. And you'll notice we've had a couple of periods over the last, let's call it 12 years or so. Uniform action above the line, back below it for the highs of 2016. Rejection here in mid-2019 for the highs there. And now we are back in this general area. We can see that if this instrument cannot move above this area in the coming weeks and months, if we see a reversal of the RSI based on my uniformity concept, a reversal around here would suggest that the next major trend direction actually is not higher but lower. And I lean towards that in the coming weeks because the stock's breakout does not meet the minimum requirements of the ultimate Muathe breakout. This is Eric Muathe with Muathe.com. Love and light, light and love. Namaste.